Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for the Cinco de Mayo, May 5th, 2021. And we are sitting here right now, about 6:30 at night, 6:40, looking at what's going on. I'll show you the exact time in a minute. But suffice to say, stock market down a little bit. It didn't help that President Biden has joined WTO in saying that the developers of all these vaccines in the U.S. should give their patents away to the world for a short while. I don't know. I understand the public good, don't get me wrong, but that's a line I don't think should be crossed. I am sure the pharmaceuticals, well, they got hit hard today, but that's pretty strange. Had they not been working with them and given away the vaccines or whatever has to be done, that'd be one thing. But to just give out your intellectual property, I've got my doubts on that. In any case, you're up in the gold a little bit. Your silver's unchanged. Copper's just unstellar, but 460's high. Just like when you got up today in the Brent, you got up to nearly $70 a barrel. Yeah, in the July Brent. And now you sold back a little bit. Okay, I get it. Bonds and notes, very, very stable, but the tips are still saying inflation is coming, and I wrote about that in tonight's update. Dollar index up a little bit tonight, but probably down when we reopen as the euro's up a little from there. So let's go to this. And as you can see, the battleground is right here, that 18-week average of closes. If you've been a regular viewer of mine, how many weeks has it been that I've been telling you about this, that was the number I thought the market had to go to decide what next? We're there. So now we have to see how the market can respond. What we've got is a congestion going on in the chart, and when you put the swing line on it, the congestion makes a little bit of sense. Here's what it looks like without a swing line. With the swing line, you have higher lows and higher highs. We don't know if that's going to be a low yet. It's an inside day. We haven't taken out the highs of today, and those highs were 1788.10. We're 30 cents away from that right now. But if it does, it's just another high. Where do you think the battleground is in this market? If you had to make a wild guess, look at the 18-day average of closes and tell me what you think. That's why I use that average. It tells you often, it's not all the time, nothing's all the time but death and taxes, and they're going up. But if you take a look, that's the battleground. So far, the market has an upside bias. It has what else? A trend that is up. What else? The resistance is first the 100-day average, but where's that Bollinger Band? It's just under it at 1840. So that is the number right in that 1800 zone that I've been talking to you about over and over that I think's the resistance. We have to see what the market does. If and when we close over that 100-day average, you may get over it and back under it. It is a sign this market wants to go up again. So that's what I think that markets are telling us a story about. When you look at the slow stochastics, they've worked off and dropped enough now where they're no longer overbought at this particular time. It takes either of these numbers to be over 70. Now, if I take you back just a little bit, you can see how the market's been working its way down. You lost them there, then you gained them back. So you're back to that point again. All right. So in summation, you have a market that's trying to not get overbought again. The trend is up, the bias is up, and resistance very solid at that 1800 level. In the gold-silver ratio, we keep working against that 18-day average, but not able to get over it, which means silver remains stronger than gold on a relative basis. And if you look at this chart, silver right now is trying to set up a trend. If it can take out or just do what it's doing right now, we could end up, if you don't take out the lows of today, which was Wednesday, if we don't take out the 2616.5 level, you could end up with higher lows, higher highs. That would be the first time that's bullish. I don't know that I don't want to first see the market challenge some of these averages again, but we're right at the zone where I expected good things to happen, and something else happened today. Now you should say to me, Ira, what is that? Look at the 18-day average relative to the 100. Here's tonight's action. Look at these two right now. Okay, so what is happening is the 18-day, right here, this is where you're at, just got over the 100-day average. Do you see this? Bring you back. That's where you were. Look at where you're at now. That's a bullish crossover if it holds. If it holds, it often means prices are going to make a run for that high. We'll see if I'm right or wrong. If it holds, I didn't say it would. It's very early. Right now the time is 6:46 p.m. Chicago time, so it's very early. And we're also bringing in these Bollinger Bands, but I'm getting more bullish. In the copper market, I'd like to see a little bit of a correction for traders to be able to buy on this break. As long as you keep the embedded reading without that red line closing under 79, I think the pros will keep buying these breaks looking for higher highs. When I look at the platinum market, you've got a momentum that's turned down. You have still a higher low, higher high scenario. Tell me what the market did yesterday. You got up right to the first challenge again after about a week of that upper Bollinger Band, rejected. Market falls back today. Didn't quite make it to the 18-day average, but I'm not sure it matters. One of the things I teach in my charting course, and I practice in my morning subscriber video, as well as my written updates to my clients, is this. You look at that risk to this low, and I have a risk tolerance that I set up for higher risk, medium risk, lower risk, super low risk trades, all through there. And I have different categories within each of those categories themselves. And this is outside of it. So the market didn't fit into, in at least what I've got here, that it's a buy even if it hits that 18-day average. If you take a look, this low right here is 1195.50. So even if you hit 1209.90, just giving you an example, let's call it 1210, you're still going to be, what, 14.5 points? That's a lot of money. You know, $50 a point, it's beyond my risk tolerance for a normal trade. And I do have money management tools. In the palladium, you're still embedded. This market is screaming to me it's still a buy until you get under 79 on a closing basis in the slow stochastic with a goal back up to 30.67. Dollar index, first challenge where you're over on a closing basis, the 18-day average of closes. If it pulls back, I'd expect support back at the 18 down to the 100-day. There's no setup here to be bullish or bearish. You have a higher high and a lower low in a market that has worked itself out of being oversold, but it used a lot of that energy to get up here. Very solid resistance, 91.94 to 92.05. In the Ethereum contract, you still have the higher lows, the higher highs, fully embedded. I'm telling you, each break back under that 18-day, under the upper Bollinger Band, is being met with buying at a key moving average. I don't show that in this update. That's what I show my subscribers. So you put it together, you get a game plan. And I want to tell you about my game plan. Not everybody that watches this is absolutely suited to be making their own trades, their trade decisions. They probably need a broker. My brokers have 20 plus years experience. They're not expensive to work with. They'll develop a program with you. Let's assume you want to follow my trade ideas. They have every one of them. They'll tell you what's going. They can work that with you, explain why he's doing what he's doing. They've all taken my course for years and years. They're very versed in what I do. They're going to be able to discuss with you major reports because most people want that. They want to talk to somebody that's got years of experience. What is going on? Maybe what does Ira think and what do you get for that? So if that could be what you want, they're there to service you. How do you get hold of them? It's simple. You give us a phone call. So all you have to do is give us a call at 866-973-2077. They'll cherish your call, I promise you that. They want to work with people. We've gone back, and I told you this 3 years ago. We believe that the retail area is where people like you belong. I know you're going to tell me you do fine. Show me your trading results. Maybe, just maybe another pair of eyes on that would have helped you. 866-973-2077. Give us a call.